From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Well, hello. This is the COB, all the stuff you need to know about the day in business and markets. I'm Nadine Blaney.
I'm Kyle Rodden, and it's been a while since you're in the driver's seat today. I'm in the passenger side, so to speak, but it's been a little while that we've done it together, so it's great. And not a bad start to the week. I think we're going to finish about 0.3% higher for the CBO 200 or thereabouts.
Not only a good start to the week, a good start to the month, new month of May the 1st. And I think that there is a little bit of optimism just building because US earnings season was not as bad as many had expected it to be, even in the small cap space. I had a bit of a chat with Niv Dagan from Peak Asset Management. You can listen to that online shortly. And he was just saying, earnings expectations, even the small cap end of the US market wasn't as bad as expected. So when you combine that with, potential pause coming from the RBA tomorrow, I know we'll get there. But there's been a bit of FOMO out there. The market's trading close to 2.5-month highs.
Yeah, how about that? I mean, it has been sort of thin trade, it has to be said. We have had a lot of the region on a public holiday, and I guess that has to be taken into account. But I mean, that US earnings story is probably the remarkable one. We're just looking at that FactSet data that gets thrown around just because it's free. And I mean, there was the estimate for a 6% contraction in earnings. It still looks like we're going for an earnings decline, but it'll be 2 or 3%. So not so bad, and probably pointing to perhaps some resilience in the US economy. And
we do have Apple still to come. And it's so interesting, the timing of Apple, because of course it's right after the Fed's decision. It's going to be a big one. I mean, we are expecting to see revenue decline, but still, if it comes in like the other techs, generally speaking, I know that Amazon disappointed after the market when it talked about cloud, but I mean, the tech has really been fueling this rally so far this year. We'll see if May is any different. But back to today, you're right, Kyle. I mean, we had the local market, looking pretty sweet throughout the day, held on to most of the gains throughout the session, and looks as if the S&P ASX 200 will close up by about 0.5%. Let's take a look at the CIBO Australia market if we can, just to see where it ended today. Anyhow, our three themes definitely are revolving around that. ASX enthusiasm, also house prices.
Yeah, well, in Sydney anyway, Melbourne was 0.1%. I'm sure it wasn't in the apartment complex, so that doesn't
you know why, Kyle?
Me.
Yeah. Very selfish he is.
Yeah, exactly, always. But nevertheless, increasingly we're talking to experts in the space. I've had a really great, we had conversations with CoreLogic today. I had a conversation with a Domain last week. There's this sense that might have been the bottom.
I had a conversation with Eleanor Cray from REA Group today. That is online if you'd like to listen to it. And house prices consecutively nationally have risen for 4 consecutive months. You know who you have to feel sorry for? Renters.
Yeah.
Sorry, that also includes you as well. It's all about you, Kyle, really. We just designed this all around you.
Kyle did.
But boy, it's tough out there. And Eleanor, well, you can listen to it yourself, but she doesn't reckon it's going to get any easier anytime soon.
No, and we did talk before to rate expectations. I mean, not just locally here, of course. Throughout the globe, the US Federal Reserve probably will go 25. That's the consensus call. The commentary is significant there too. But there's a non-trivial risk that the ECB could go 50. 25 is the expectation, but nevertheless, they've got their own inflation issues. Had a great chat actually with Sean Callow today just around the market impacts of that. The Australian dollar on a trade-weighted basis is at a 14-month low. Not something that many folks have been talking about, but nevertheless, big.
Look at the price of iron ore. Look at the price of Asian LNG. Look at the price of coking coal. And that will tell you a lot about why the Aussie is where it is. But chat with Greg Medvedjev from City Index earlier this morning. I mean, we talked a lot about the risk events out there, but he reckons that the market itself has sort of forced the Fed into this hawkish hike scenario because with the FOMO, that's out there right now, he just reckons that the financial markets have backed Powell into a corner. If he didn't come out with some sort of a hawkish tone, then it's off to the races again, off to the moon, I think is what he said. So there's a tightrope still being walked by these central banks. And look, whether or not our own central bank can afford to pause when, the inflation genie is not back in the bottle, we will see. But it's a tough environment because yeah, if you're the RBA and you pause and then later find yourself having to hike when other central banks who've continued to hike then pause, what happens then?
Well, exactly. And I mean, we'll go back to talking about it. I think by the end of this week, the difference in transmission mechanisms. I think that's why the RBA is a little bit nervous, because it knows it can hit households over their head pretty easily. But it does beg that question in the United States. If they're targeting financial conditions and every time they look like they're going to pause or take a backward step, financial conditions loosen, makes their job tough. So it's a pretty invidious position to be in, of course.
Yeah, and I spoke with Dr. Tano Pelosi from Antares Capital. That, of course, will be up online, but just his assessment of also how the banks and still, the credit crunch that is inevitably coming, like night follows day, I think somebody said, when you get a tightening of monetary policy, you do start to see the slowdown. And the banks and the banking issues, not crisis, but issues in the States play into that as well. But Kyle, we digress. Let's get back to some of these performing sectors here locally and look no further than utilities. That was a really great day for the utilities space today.
AGL up 3%. Yeah. A really good day for the, what do they call it, Jen Taylor there. I think I heard Gags talking, referring to that earlier on in the day. But yeah, fairly positive across the board. I mean, Meridian's a different kettle of fish, I suppose, given, well, it's in New Zealand and it's all renewables, but nevertheless, Origin up, APA Group, all looking pretty positive in terms of utilities. The
healthcare space also looking good. I'm not going to go too far into it. Oh, there's energy. Yeah, there's energy. There's healthcare. Resmed, that's wrong. So we will move on from that.
That company still exists for anyone whose heart's good to beat. But CSL back above $300. I didn't notice until we did the leaders and laggards today that was the case. But mining still in focus. Actually quite mixed today, despite the fact that we have had, I guess, some softness coming through the iron ore price recently. And interestingly enough too, gold miners were probably the sector overall, or the subgroup of the market that have been the worst performing. Just
a bit of news from Fortescue saying that Iron Bridge has begun high-grade magnetite production. So the first run coming through there, greater than 68% Fe. So further update from the company on that Iron Bridge project. But yeah, it was the worst performing sector overall when you've got BHP down significantly, South 32, and as you said, those gold miners, the material space was what weighed on the market. As far as corporate news, we showed you Origin. It had an earnings upgrade coming through. Transurban Investor Day updating on its distribution, not QBE, that should be Cube Logistics. And Adore Beauty I put on the list because, yeah, it's come out with a trading update. I just think this is such a poor story. Active customers down, revenue down in the quarter. Its founders have both decided to leave the business. They were in part-time executive roles. They say they won't sell. They don't currently have intentions to sell their shares. But yeah, that wasn't a good update. And the company is looking to cut costs. It's working through its long-term strategic goals and plan. It's just a pretty bad story. And then you've got an offer on the table for Best and Less.
Oh, there we go. I wasn't across that necessarily today. Maybe what was that offer? What was going on?
It is from one of their current shareholders and another group, and I believe the offer is for $1.89 per share. And so we'll watch to see how that one eventuates, because we have been told, by some analysts, Grady Wolf from the team at Bell Potter comes to mind, saying that, Best and Less might have a little bit more resilience in these more difficult economic times as people tighten their wallets and, trade down for more value options. But I've also heard, some say the exact opposite when it comes to Best and Less as well. Speaking of the retailers, had a conversation with Harrison Watt from Shaw Partners and Market Matters today about the staples versus the retailers in light of the RBA and the consumers. So that's online, and it's also available in the COB newsletter version.
Ah, beautiful. It's a big discussion point, actually, the resilience of the consumer plays, and goes back to what we were talking about in the States. Had a great conversation today. Did you know that the aggregate earnings for consumer discretionary stocks is up 50% on Wall Street? Again, another sign of resilience. And the ASX 200's consumer discretionary sector is still at the top of the pops when it comes to performance in the 4 months of this year. So, hey, so far so good.
Those are my party fun facts. Thank you for this week, Kyle. Glad I'm hosting this today. Look, the stock of the day today was Resmed, and I think it Well, I asked our viewers what they'd like as the stock of the day on the call, and so this is what they came up with, but for good reason. The quarterly report, as you know, was released on Friday, but it was a very tepid reaction to what many describe as a very strong report. In fact, all the brokers are pretty positive on this one, and Wilson said that it's like short-termism on the stock, bemoaning the gross margin impact of success misses the point of what's happening in the sleep market over the past 12 months. So the share price today was the best performer. It's up by 6.3%. Let's listen in to what our guests had to say.
Both the top line numbers were actually better than expected. So I think the market's looking past those margins and going, well, we can see down the track that those margins could improve. So look, we like the stock. I'm happy buying the stock. Need to have a closer look at the numbers after a 6% rise, but we're very positive on the company.
It's a great stock, and it does give you opportunities to buy it at lower prices. So if you don't own it now, certainly keep it on the watch list, because when it does pull back, it's a fantastic business for the long run. Well, we've been buying it pretty pretty positive on it in the lead up. So I don't think we'd be calling it a buy right now. But like I mentioned, this stock will give you an opportunity to get in at a cheaper price, because it's not a 6-month story. It's an industry with a very long-term tailwind, and they're very clearly the industry leader. And I think that Philips recall story will probably take longer than most people have expected, and it's actually been delayed multiple times now. So it's a story that will have growth for many years.
Okay, so overall pretty positive there, of course. Just wanted to add to, considering we did have Francesco Distratus on Orbinet, the brokers there upgraded the stock today to an accumulate from a hold. So again, it was a bit of a slow burn, those results perhaps, but seemingly flowing through into the market now.
Yep, and so that was a double buy. It will not be going to the investment committee this month because, of course, we're bringing you the new edition tomorrow just after this program, 4:15. Stay with us. You will be able to watch and hear what the investment committee has decided to do with all of those double buys, double sells from the month of April. Tomorrow's going to be a big day, isn't it? So will the RBA come out with a hawkish pause? Will it be a dovish hike? Or I don't know. Let's find out what the team at eToro is thinking. Josh Gilbert is joining us now live. Josh, look, equity investors of all stripes will be very tuned into what goes on at 2:30 tomorrow. Agree?
Absolutely, yeah. Look, I think it's going to be, the focal point for the week. Obviously, all eyes go back to the inflation data that came through last week. Came in, slightly, hotter than expected at 7%. But it obviously did show that inflation had peaked. Then we obviously had trimmed mean inflation came in below expectations at 6.6% as well. I think for me, I don't think the reading offered any surprises really, and didn't really sort of change anything to the upside. I think for the RBA to sort of reconsider hiking again. Ultimately, they paused in order to monitor this market, to monitor the lags of obviously their monetary policy, and given that I don't think anything has significantly changed, I'd be surprised to see them hike again. I think the market would certainly be surprised to see them hike. It's ultimately heavily priced in at this point, another pause. Having said that, I do think though that another hike can't be ruled out. Inflation is still really strong. I think one look overseas can show that inflation it isn't an easy fight. It isn't coming down as quickly as some central banks would have hoped. And I think that's something the RBA has to consider. I think the markets expect only a 10% chance of a hike tomorrow. I'd probably put that more around about sort of 30-40%. I still think they will pause, but I think there'll be a big conversation. Markets do think this is the peak of interest rates as well. But the bottom line here is ultimately that if they do hike, then it will shock the market because they are pricing in a pause, which is, as I say, what I think they'll deliver.
Which takes us naturally to the Fed on Thursday morning. Expectations are for a 25 basis point hike, but again, it's about that commentary and whether, well, we get happy Jerome and leaves the door open to cuts, or angry Jerome and he tries to slap market participants down. I mean, what are you sort of watching for out of that event?
Yeah, look, I think they'll hand down one more sort of final insurance hike. I think obviously the banking issues, especially over the last few days, I think will throw up the possibility for a pause. Will obviously add question marks. I think he will hike, and I think he will probably stay hawkish in the sense that that he'll reiterate that he doesn't expect any rate cuts this year. Markets are pricing in about 2 rate cuts for the US this year. So I think his hawkish tone will be to sort of reiterate that he doesn't expect cuts this year, because as I think quite a few guests that you've had come on the show have said so far today and over the last week, is that the markets have got ahead of themselves, and I think that's obviously been helped with a stronger than sort of expected earnings season, a resilient earnings season so far. Obviously we're only halfway through, but markets are still trending much higher, continue to move higher. Consumer confidence is sort of gaining. So I think he'll sort of stay on that front foot. I think he'll deliver another hike. And again, just like I said with sort of Australian inflation, it is still pretty high. The banking issues have helped the Fed in terms of that tighter liquidity, slowing loan growth. Obviously inflation is expected to fall faster as a result, but I think they'll just deliver that one more insurance hike, because it's much easier to tighten now than to pause and have to re-tighten down the line.
Hey, Josh, what about Apple's results? That is going to be interesting, isn't it? Particularly as the scene setter that's come from the other top tech names.
Yeah, well, look, I mean, tech triumphed last week, really, didn't they? It was, another resilient earnings quarter. I think in terms of the expectations, again, they were pretty low coming into this earnings season, but we sort of avoided that sort of real profit slide or that profit decline that I think much of the market has maybe anticipated over time. But obviously, Apple investors are accustomed to having good results. Last quarter, they didn't get that, but before that, we had 8 beats. But before that, so they'll be expecting a decent result here. I think the worry though heading in is going to be obviously on that sort of computer spending slowdown. Are consumers still paying out for those big ticket items? We saw Samsung results right at the start of earnings season were pretty poor in terms of computer spending or personal computer spending. So there's a worry over Mac demand. But I think the focal point, of course, as usual, will be iPhone. It's obviously the primary revenue driver. I think it should be boosted by the reopening of China, given that that makes up for about 1/5 of its revenues. And obviously those easing supply chains from China as well should be a big help. We are seeing that there is probably less demand for smartphones at the moment, but I think that should be offset by Apple gaining a little bit more market share as well. So I think that will be a focal point if iPhone demand can hold up. But I would like to hear from Apple, on the earnings call in terms of, operating expenses for the full year, margins, what their sort of forecast could be for the full year as well. But look, I think the way we've seen earnings go this week, I think the market is ultimately anticipating, another strong beat. But I think that is needed, right? Apple shares are up 30% this year. So if we don't get a strong result, then the market is probably not going to like it.
Josh, huge week. Thanks for helping us preview it. We'll let you get back to yours. Josh Gilbert from eToro there.
Thanks, guys. Take care.
See you, Josh. All right, so we have seen the US dollar sort of drifting higher in Asian trading. But as you referenced, we do have some markets on holidays today. So we've got markets in the UK, we've got markets in Japan and Germany, all closed. But that ISM manufacturing PMI that's due in the United States, so it is showing slowing, and it could, we want to see it continue to slow. Of course, that would be supportive of maybe a Fed that is nearing terminal rates or has reached terminal rates. But it it'll be an interesting one to see what sort of volatility that may or may not inspire.
Yeah, Labor Day in Europe, so day off there. But like you said, that PMI survey will be significant. Expected to pick up very slightly from last month, which was at 46.3. Forecast is 46.8. That price sub-index as well is going to be crucial because, of course, we're all watching those inflation pressures. Perhaps not as crucial at the moment as the services PMI survey, which we will get towards, I believe, the back end of the week. In fact, it might even fall. It will fall just before the Fed, and that's expected to stay in expansionary territory. Nevertheless, we're going to be very clued into some of these data releases heading into that decision on Thursday morning our time.
Tomorrow, it's all about the RBA. Tomorrow night, we hear from the doctor himself. Philip Lowe will be speaking. We do get the Shaixin manufacturing PMI in China tomorrow, but really none of it matters except for the RBA. We get a quarterly report from Woolworths and Evolution Mining just for good measure, but we've got plenty of fantastic guests lined up for you. We've got a special programming around 2:30 for our Rates Live, and looking forward to breaking that down with you live.
Okie dokie, well, let's get to the leaders and laggards now. And it's probably worth mentioning that the ASX 200 has closed up shop for the day, and it is, dropped a little bit in the post-market option, up 0.35%, but still a positive day. And as we look at those leaders now, Resmed, top of the table from what I can see, and hopefully we can get that up just for a visual aid. At the moment, we're staring into the abyss, but Resmed 6.3%, Lake Resources up by 5.95%, just by shy of 6%. So actually a little bit of strength coming there through the lithium names once again as well. Oh, Costa Group there too. A little bit of ag.
Okay, so we've got Resmed. Look, Origin Energy was one of the best performers as well. Really looking at, those broker moves helping to drive that Resmed result. Look, let's flip the page. Let's go over to some of those market laggards. We've got Syrah Resources. So it was out with the quarterly last week, down today by 12%. I had, as I said, I put a shout out for suggestions for the stock of the day. That was another one that came from our viewers. So clearly very tuned in to sentiment out there in the market. They picked the top performer, they picked the bottom performer for the day. BrainChip Holdings is one of those companies that often moves on very little. Today, all I can see is a press release about a podcast in which BrainChip discusses embracing disruptive innovations with technology leader Jeffrey Moore on This Is Our Mission podcast. Look, I dare say there's not much to that. Let's get to Silver Lake Resources. You mentioned it already. We had a lot of selling happening in some of those gold names in particular. And Goldman Sachs has actually cut the price target on Pilbara Minerals by 2.4% to $4.10 per share. It follows UBS cutting the price target on Pilbara last week, even though we have seen its cash generation really exciting some of those bulls out there last week in the wake of its third quarter results.
Yeah, just on that Syrah note, down almost 32% in the last few days. So it's been the worst performer in the market for the last three sessions, and no one's buying the dip on that thing, it would seem. So a rough run for Syrah Resources investors.
I like taking a look at the small caps. Let's do so, shall we? These are some of the market leaders. We've got PointsBet. I had a good chat with Niv Dagan from Peak Asset Management, up by about 20%. Today, look, it's looking to offload one of its businesses, 4D Medical, and Sezzle was up by about 12%. So those are some significant gains there in the small cap space. Peak Rare Earths, a discounted share placement to raise money.
Is that right? Okay, and I suppose the biggest laggard there you can see on your screen, Mindax. Any idea what Mindax does? No, we always learn a few different names, although ImpediMed we learnt about last week too. So always fun getting this mixed bag of lollies, but nevertheless you can see the small cap leaders and laggards there.
So, Kyle, shall we pull the curtains on this Monday session, the 1st of May? We've got the local market, finishing quite strong. We've got the S&P ASX 200 up by about close to 0.4%. That is the beloved CIBO Australia index. And when I look at E-minis, looking pretty solid at this stage, I guess. I mean, at least in positive territory for the S&P 500s. And we've got the NASDAQ E-minis up by about 18 points.
Yeah. Okay. So like we said, it's going to be a quiet session tonight, relatively speaking. Europe. We'll keep an eye out for that US economic data overnight as well. But well, you can catch up on everything today on your platform and on the website, the best views and interviews. But join us tomorrow in the morning. We'll see you then.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.